Michael Saylor just convinced another Fortune 500 company to dump their cash reserves. But here's what nobody's telling you about this Bitcoin Treasury revolution and why it could change everything about corporate finance in the next 5 years. I'm your name, and today we're breaking down the real strategy behind Bitcoin Treasury management. Before we dive in, quick question. If your dollar loses 7% of its value every year to inflation, why are companies still holding billions in cash? Drop your answer in the comments. Now, let's get into it. Here's the reality. US corporations are sitting on over $5 trillion in cash. Sounds safe, right? Wrong. With inflation running hot and interest rates unpredictable, that cash is melting like ice cream in the sun. Traditional treasury strategies, think bonds, money markets, foreign currencies, they're not cutting it anymore. Michael Saylor calls this financial self-destruction, and he's not wrong. So what's the alternative? Bitcoin. Now I know what you're thinking. Isn't Bitcoin too volatile? Yes, but here's the key insight Saylor hammers home. Bitcoin isn't about liquidity. It's about preserving value long-term. Think of it like this. Companies aren't putting their emergency fund in Bitcoin. They're converting idle cash that would sit there for 5, 10, 20 years into a scarce digital asset with a fixed supply of 21 million coins. MicroStrategy started this strategy in 2020. They've bought over $6 billion worth of Bitcoin. And despite volatility, they're up massively because they treat it as a strategic reserve asset, not a checking account. Other companies like Tesla, Block, and even pension funds are following suit. Let's be real. This requires a massive mindset shift. CFOs and treasury professionals are trained to avoid volatility. Bitcoin can swing 20% in a week. That's terrifying for traditional finance teams. But Saylor's argument is this: short-term volatility is the price you pay for long-term value preservation. If inflation erodes 7 to 10% of your cash annually and Bitcoin's long-term trajectory is up, which risk is actually greater? That said, companies need strong balance sheets, long-time horizons, executive buy-in, and proper accounting strategies. This isn't for everyone, but for companies with excess cash, it's a calculated bet on the future of money. So here's my take. Bitcoin treasury strategies aren't about getting rich quick. They're about not getting poor slowly. As more companies adopt this, we're watching a fundamental shift in how corporations think about storing value. Cash is no longer king. Scarcity is. Now your turn. Do you think Bitcoin belongs in corporate treasuries, or is this just hype? Comment below. I read every single one. If you found this valuable, smash that like button, subscribe for more finance breakdowns, and check out my video on related topics right here. Remember, in finance, the biggest risk is often doing nothing. Stay sharp, stay informed, and I'll see you in the next one.